Hello. Thank you everyone for joining us today for our presentation on tax-savvy giving strategies for year-end. Welcome. I'm Stephanie Miller. I'm the Director of Major Gifts here at Animal Humane New Mexico, and I'm very pleased to introduce our speaker for today's session. He is Paul Madrid, and he is a principal and wealth management practice leader with REDW Wealth, LLC. REDW Wealth are our financial advisors here at Animal Humane New Mexico. And for example, one of the many valuable services they provide to us is when someone donates stock, they help us accept and process the stock donations. In addition to providing us with their financial expertise and management, they have been very generous sponsors for many years of our largest fundraising event, Doggy Dash and Dawdle, and they are big animal lovers over there as well. Paul joined REDW Wealth in 2008. He has a degree in financial management from the University of New Mexico's Anderson School of Business with a minor in economics. His clients include individuals, companies of all sizes, government institutions, and Native American tribes. So we really appreciate having him as our presenter today. So thank you very much, Paul. And with that, I will turn it over to you.
Well, thank you, Stephanie. I appreciate the introduction, and thank you all for jumping on today. We have quite a bit to cover, and hopefully you can get a lot out of it today. So let me share my screen here. Okay, well, we should be good. Hopefully the audio's doing well here, so I'll try to speak up a little bit. One thing to note is there is a Q&A box at the bottom of your screen. If you have any questions throughout the presentation, please type them in there. I will try to get to them either on the fly or towards the end or at the end, but also have some pre-questions that came through before the webinar. So thank you for those who had sent those in before the webinar. We'll definitely get to those at the end. But again, welcome. So let's go ahead and get started here. Obviously, we did the welcome. What I'll talk about today are a few things, just general giving and what that looks like and how you can interact with Animal Humane. I'll also speak to donor advised funds. There's a lot of chatter about DAFs out there. Donor advised funds are also called DAFs. Essentially, we'll dig into that a little bit and tell you how the mechanics work. Sometimes that may not always be so intuitive. We'll also speak about qualified charitable distributions and a little bit about planned giving overall. And as a reminder, use that Q&A link at the bottom if you have any questions. So let's go to get started. First, I'll start out with a little bit about me and my love for pets. We actually have a number of pets. We have chickens, we have birds, and then we have some dogs. We had 3, we have 2 now. This was our first dog we got when we first got married. His name was York, and very tenacious little guy, but fun to have around. In fact, I had 3 Yorkies at one time, and I don't know if you can see my screen here or my cup, but essentially I love my little Yorkie dogs, and he's certainly a special one there. All right, let's get into some ways you can give. All right, so basically, as I mentioned, there's a few ways to give, just outright giving. This can include stock, cash, other property, and we'll dig into that a little bit. We can use the DAFs, the donor advised funds. We could also use what's called a qualified charitable distribution, QCD. So you may hear me say QCD throughout the presentation, and that's just an acronym for qualified charitable distribution. And then other forms of planned giving, like estate and so forth. All right, so let's speak to cash. So many people do it this way, and that's perfectly fine. It's a gift. You get the credit on your tax return in many cases. But essentially, when you give cash, you can take a deduction on your tax return if you're itemizing taxes. If you're not itemizing taxes, then you'll have what's called a standard deduction, and you can do up to $300. or if you're married, $600 of that cash contribution. Itemized deductions are basically, there's a threshold when you have over a certain amount of over the standard deduction, which will range, and I'll touch on that in a moment. Then you can start deducting these. This can include interest from your home or the mortgage, I should say. It could include state and local tax up to about $10,000. But anything else like charitable giving and so forth will be added to that itemized deduction. When you give cash, you can deduct up to 60% of that of your adjusted gross income. So as a simple way to think about it, if you had $100,000 in gross income and you gave a $100,000 cash gift, you can deduct $60,000 of that on your tax return. However, this year and last year, you can do up to 100%. So if you did give that $100,000 and you already had $100,000 in adjusted gross income, you can certainly take that full deduction. It's only for cash this year. It's a special item that got pushed through for the Consolidated Appropriations Act. Anything over that amount doesn't mean you lose it. It just means it gets carried over to the next year or up to 5 years, depending on how much you're giving on a regular basis. I touched on the standard deduction below. Essentially, the standard deduction about a couple years ago when they did the new Tax Cut and Jobs Act, they basically changed the deduction thresholds, and now you get a higher standard deduction, meaning that anything beneath that standard doesn't really help you too much unless it's over that. And then in that case, that's where you itemize the deductions. Again, it can get a little complicated, but let's dig into it a little bit on a different matter. So that was cash. I'm going to transition to giving stock. So why would you want to donate stock? There are a few reasons that you can basically bypass some capital gains, and we'll touch on that in a moment. But you also can still use itemized deduction and so forth. So I have a pretty good example in a moment that will kind of give you a breakdown of what that looks like from a visual perspective. But one advantage of giving stock is that you're basically not going to have to pay that capital gain. So if you have a stock that you paid $1 for, I'm just simplifying it, and it grew to $10,000, it's better to give that $10,000 stock to Animal Humane or your charitable contribution or charitable institution that you want to give it to, versus giving $10,000 in cash. Because if you were to sell that $10,000 stock, you would have to pay quite a bit in capital gains. And there's an example I'll go through in a moment. But it's a little different when you do give stock as a charitable deduction. When you itemize, it can only basically offset about 30% of your adjusted gross income. So if you remember from the last slide, it was 60% of your AGI, adjusted gross income, for cash. For stocks, it's only 30%. But in many cases, a lot of us, I guess it's just the way it is, don't really meet that full threshold of 30%, 40, or even 60%. Some are very charitably inclined, and they certainly do. I do have a client that does, and that's great. But anyway, we worked it on the tax side. But the big difference there is you could only deduct up to 30% of your adjusted gross income. So going back to that $100,000 example, if you wanted to give $100,000, or excuse me, if you had $100,000 in adjusted gross income, then you can give up to $30,000 in appreciated stock that you have purchased. And it doesn't have to be just stocks. I would say it could be mutual funds. It could even be cryptocurrencies these days. But essentially, if you have those huge gains in those investments that you did, it's a good opportunity to give those first versus just the cash. Because if you think about it, going back to if you sell it, you're going to have capital gains, and net after paying tax, you'll be less off essentially. So a couple other things I wanted to point out. If it is a short-term capital gain, so let's say you bought Tesla stock earlier this year and you doubled your money on that. If you were to sell it, you would have to pay a higher capital gains rate, which would be your ordinary income rate. However, if you were to give that stock, you can do up to 50% of your AGI, so your adjusted gross income. Similar to the cash contribution, if you go over these limits of 30 or 50%, you do have up to 5 years to carry that forward on your tax return. So let's say you do a big one this year, Next year, you can use some of that in the following years, depending on how it is measured against your adjusted gross income. All right, here's an example that we got from Fidelity, which actually makes it look pretty easy to follow. So gives you two different scenarios. If you sell the stock on the left side and you donate the cash proceeds, versus the right side if you just donate the stock directly to the charity, to Animal Humane, or whomever you're giving your stock to. So in this example, it's saying the value of the stock is $20,000. The current, or excuse me, when you bought it. So you paid $20,000 for this stock, or it could be a mutual fund. It could be any type of investment that you have in your investment account. You bought it for $20,000 and it's currently valued at $50,000. All right. So if you were to sell it, you would have to pay some capital gains on that on that sale. So in this case, it's saying capital gains and your Medicare surtax. So in this case, this means if you're in a higher tax bracket, you usually have 20% capital gains tax rate plus another Medicare surtax of about 3.8%. So that's where the 23.8%. So this is kind of worst case scenario, at least as the tax law stands right now. In some cases, others may be in the 15% capital gains rate versus a 20% here. But for simplicity purposes, we're using the highest rate here. You would basically have to pay about $7,000 in tax. Then you would have about $42,000, $860 left that you would contribute to that charity. So in other words, you have $50,000 in stock, you go and sell it. After you sell it, after you pay tax, you have about $42,000, almost $43,000 that goes to the charity. Great, that you got it to the charity. If you were to maybe pause and say, wait a minute, should I sell this or should I just give them the stock? That's on the right side here. So then we say we donate that stock directly to charity. So if you have, again, you bought it for $20,000, it's worth $50,000 now. You don't pay any capital gains tax, so that $7,000 goes away. The charity gets that full $50,000 contribution. So in this case, you saved yourself $7,000 in tax, and the charity gets essentially that $7,000 more as a net contribution. So it can be a little complicated. I would say just in general, what's going on is instead of paying the tax, just give it to Animal Humane or your charity that you're inclined to give to. And in that case, Animal Humane takes the full contribution and they don't have to pay taxes. So even if it was at a capital gain, they don't have that as a nonprofit. So long story short here is giving stock, especially if it has a pretty big gain in it, makes a lot more sense to give versus cash. And we can help in that process. So if you need help, we can work with your advisor and work with Animal Humane to make this process that much easier for you. We're gonna have a little bit more on stock on the next slide. If you want to do it, we have some information. So I'm going to go ahead and click on this and we should see the page here. So these links will be sent after the website or after the webinar. But this will kind of give you some information in another version of what I just said. Try to tell you how to do it. We do have a form, or Animal Humane has a form to complete. It does have our DTC transfer information on there. So I'll get into that in a moment. But the website's there. It has the information for you if you wanted to dig a little bit deeper. All right, so one way to look at it here is you have the stock donation page if you wanted to dig deeper into that. We'll use this information when you download that form to help initiate the transfer and so forth. It is important to give us or give Animal Humane the contact information. They do want to give you the credit. So if you want to make the tax deduction, you'll need some proof of receipt in order to get that donation. So certainly let Animal Humane know if we can to help, or at least your personal information. And that will be a theme throughout the presentation. All right, so outright giving, let's talk about the mechanics for giving stock, because it can be a little complicated. A lot of people will get a little confused in terms of, well, how do I do that? It's easier for me to just to write a check. I would say the first step in the process is just to contact your financial advisor and say, hey, Mr. or Miss Financial Advisor, do I have any stock or mutual funds or anything that I could donate instead of giving the cash donation? I would say, as a general rule, if it's less than, I don't know, $500, it does make it a little more challenging because it may not be that much more. But if it is, I don't want to say that's a restriction, but any contribution is fine. But usually it makes it more, I guess the process much easier and more valuable if it's a little bit bigger than that. But at any rate, you would contact your financial advisor. They would help you, he or she would help you determine which stock or mutual fund to donate. So you probably have a number of different holdings, and you may say, hey, I wanted to give $20,000 to Animal Humane this year. And instead of just writing a check, well, what do I have out there? And they may say, hey, you know what, we bought this investment earlier this year or a few years ago, and you paid $10,000. It's up to $20,000 now. We were looking to sell it at some point, so let's go ahead and give that. And they'll say, all right, let's do that. So what usually happens is the advisor will have a form. They'll have what's called a charitable gift transfer form. If you're at Merrill Lynch, if you're at Charles Schwab, Fidelity, they'll have some sort of form that you fill out, and your advisor should be able to help you fill that form out, and they'll pick that investment that you all discussed. They'll help you write that in. They'll figure out the share amounts. And if you wanted to get specific on it, you can list the actual tax lots on there. In many cases, you should. And then what will happen is they'll submit that to the custodian. So again, this could be Charles Schwab, Fidelity, Merrill Lynch, Morgan Stanley. There's a bunch of them out there. So they'll submit that to the custodian. And then within, I would say, a week or two, the shares get transferred over to Animal Humane. If it's at Schwab, that's where the Schwab account is for Animal Humane. It probably will happen within a couple of days. It's actually pretty quick there. But essentially on that charitable gift transfer form, there'll be a request for a DTC number. Essentially, that's like an address, so to speak, for an investment account and the broker that holds that account. So Schwab does have their own DTC number. Feel free to give us a call, or you can contact anybody at Animal Humane, and we can get that for you as well. So basically, there's a small, I think it's a 4-digit number. You plug into that. You plug in Schwab as the custodian where it's going to for Animal Humane. Plug in Animal Humane there, and then you submit the forms to your advisor, and they'll get it to the custodian, and they'll get that transferred over. But also, again, notify Animal Humane, hey, I'm sending over X amount of shares of X stock. So you can say, hey, I'm sending 100 shares of Tesla stock. Will you just be aware it's coming from me? So in that case, then they'll let me know, hey, so-and-so is sending 100 shares of Tesla stock. Please be aware of that and let us know when it arrives. And essentially what happens at our end is we see the stock come through, we sell it, we reach out to Animal Humane, and we get the cash to them. All right, so now I'm going to shift gears a little bit. We'll go to a donor advised fund, a DAF. You may hear about these. You probably heard about them more frequently over the past maybe 3 or 4 years when the Tax Cut and Jobs Act came through, because what they did when they increased that itemized deduction, or at least the standard deduction, so less people got to itemize, charitable deductions didn't help so much. So essentially they said, hey, well, let's use this thing that's been around for quite some time. Let's use this donor advised fund. A donor advised fund is basically a charitable investment account, which you can contribute to. And once you contribute to it, you can invest within that account. What happens is, because of the higher standard deduction, let's say you were giving, I'm just going to simplify it. Let's say the standard deduction was $20,000. And let's say you were giving about $10,000 a year, and you didn't really have any other deductions. If you wanted the tax benefit, at first I should say taxes shouldn't be the main reason you should give. You should want to give the taxes just a benefit there. But let's say you have that $20,000 itemized deduct or standard deduction. You put in $10,000. You used to give the charity that you used to be able to write off as a tax deduction, you don't really quite get it anymore. And I have a visual of that in a moment that we'll go through that will speak to that. But essentially, it allows you to put a chunk of money into this donor advised fund, and it's kind of like a front load of investments. So let's say you wanted to do $10,000 and you plan to do that every year, and you just do it all the time. So basically you can say, I want to front load this for 5 years. I want to put $50,000 into this donor advised fund. One, because I'm either made a lot of money this year and I want to reduce that taxable income, or two, I just want to get a better deduction on my taxes. So in that case, you put that money into this donor advised fund. You'll get the tax deduction as if it went directly to the charity already. Again, going back to those 30% for kind of stocks, 60% of your AGI for cash and so forth. Essentially, the money gets in there, you get the tax deduction, but then you have until you pass away to give out that money. So that's a good way to basically help shield some taxes if you have a pretty high tax year, and then allows you to pre-fund a lot of your charitable inclinations. But when it's in the account, you can keep investing it. And then when you decide to give a certain amount every year, you can do so at your leisure. So useful tool. It's been around for years. It's just been utilized more frequently because of the higher deduction, the higher standard deduction. All right, so the donor advised fund, want to just give you an idea of what that page looks like here. So again, Animal Humane, they have a ton of resources on their website. I would encourage you to use them. It gives you some information about the DAFs, tells you how to make the gift. It even has this little link, DAF Direct. So if you have a Schwab or a Fidelity DAF account, use this tool. That makes that process so much easier for you or for anybody who's doing it. So it's pretty useful link that's on their website. In other words, how do you do this process? You can use that page, use that DAF link that I just showed you, or you can just ask your advisor and say, hey, how do I do this to give it from my DAF? In many cases, just let Animal Humane know, hey, I'm giving you $10,000 and it's coming from my DAF. They may not know, even though you may write a check from your DAF account or something like that. So currently it's doesn't always get to them, that information. And again, we want to give you that credit. So you get the credit where credit's due. One consideration at the bottom here is naming Animal Humane as your beneficiary of the DAF. So let's say you funded this DAF. Let's go back to that $50,000 contribution. And let's say you're planning to use that $50,000 over the next 5 years. When you make the DAF account, you have an opportunity to put a beneficiary. So God forbid if something were to happen to you after that first year, then the remaining of that balance could go directly to Animal Humane or any charity that you choose. So those are some ways to give from the DAF overall. All right, let me talk a little bit about the mechanics here. So again, similar to the stock giving, it can be a little confusing. So I wanted to try to make it easy for everybody to get a sense on how it all works. So as I mentioned earlier, they're usually initially funded for future giving. They're usually invested, so you can grow that balance. Again, if you put that $50,000 and you buy some pretty good investments in there, that could grow to $60,000 over time. Most DAFs will offer a check, a writing privilege essentially. So basically you open the DAF account, you'll get a checkbook, and it would be just as if you're writing a check from your bank account. So I would certainly use that checkbook. It's going to be from Schwab, Fidelity, wherever your DAF is currently set up at, and you can use that to write a check. I would, again, use that as an opportunity to either put in the memo section who you are, or when you mail that check to Animal Humane or anybody, let them know who you are so you get that credit due. As I mentioned earlier, that DAF Direct link on the Animal Humane website will allow you to do it electronically and make that process that much easier for you. Some DAPs, they may require you to initiate the donation with the provider. So I know Schwab Charitable and Fidelity Charitable are some of the biggest ones out there, and they have tools like this that make it easier for you with the DAP Direct. But some may not have all those tools. And I know like community foundations, they'll have DAPs and so forth. If you wanted to do that, you may have to work with them and have a form or something to submit that contribution to Animal Humane or to the other charity that you choose. But in many cases, they do have a check option. You can use that check and you can just write it off or write it to the charitable institution. And again, just let the charity know, hey, this is coming from me, keep a lookout for it. Makes that process that much easier. All right, so now I'm going to switch gears to qualified charitable distributions. We did get a couple questions on this that I'll touch at the end, and I may even speak to a little bit now. But qualified charitable distributions, also known as QCDs. So essentially, a QCD is a direct transfer from your IRA to the qualified charity. So if you have a required distribution, so there's what's called the required minimum distribution from your IRA that you have to take out. So the new rule says if you're over 72 years of age, you have to take out a certain amount from your IRA or your 401k every year. Once you do that, there's going to be an amount that you have to take out. You can use up to 100,000 of that dollar amount to give to a charity and bypass pretty much the tax return essentially. And I'll show you, I'll dig a little bit deeper than that in a moment. So in this case, you don't have to worry about itemizing on your tax returns. It's the best way to give if you have a required minimum distribution. Now, I want to clarify that not everybody who has to take a required minimum distribution can actually qualify with a QCD, with a qualified charitable distribution, because you have to be over 70 and a half to make that QCD count. So some of us may have what's called a beneficiary IRA. Let's say your mother, your father passed, or someone else passed, that you have what's called an inherited IRA. If you're under 70 and a half, you cannot take that as a qualified charitable distribution. It's unfortunate, but again, it's just a rule the IRS has overall. So if let's say you're 40 years old and you got this inherited IRA from your brother or your mother or somebody, yeah, you can certainly give other ways, but the IRS won't allow you to use this qualified charitable distribution. Another point here, similar to the DAP, with your IRA that you have, you can list benefit, or you should list beneficiaries. And if you don't have any person that you want to leave it to, or if you're more charitably inclined and you want to leave it to a charity, you can certainly list Animal Humane or any charity that you want as a beneficiary of your IRA. And that would always bypass tax. So that's a pretty positive thing there. So why do a QCD? So why does it matter? Why is it the best way to have this kind of contribution as a charitable contribution? So I kind of touched on it earlier, but there's a higher standard deduction with the new tax law that came out a few years ago. I guess it's not that new anymore, but essentially in the past we had lower standard deductions. So when you have a higher deduction, that means any contributions or any deductions that you had before, they have to at least meet that minimum standard deduction to be beneficial. So charitable contributions may not have the same tax benefit as they had before. So if you're currently taking the standard deduction on your tax return, which a lot of us are, because again, it's a higher threshold, you may be better off making the charitable contribution, or you will be better off making it directly from your QCD. Even if you're not, even if you are taking an itemized deduction, the QCD is still going to be a better way to go, because it just goes directly to the charity. Here's an example, maybe a little small here. I was trying to get my screen to blow up earlier, but it's not really working with me. So at any rate, this is there's two basically scenarios. The left side, if you make a contribution from your taxable account, and then the right side, if you actually do it directly from your IRA. So what we're seeing here is an impact of that 27,000, basically a standard deduction of 27,800. That's usually for someone over, I think it's over 65 or so that gets that, and they're married and they get that standard deduction. So really what happens here on the left side, this person may have 80,000 of pension income. They would have about 30,000 of their RMD, and then they would still have some other taxable income less the standard deduction. On the right side is what happens if you give that $10,000 contribution from your IRA. So that basically reduces the required distribution from the 30,000, which you see on the left side, to the 20,000 overall. And that's not going to be taxable for you. So basically, in a nutshell, if you give it directly from your IRA as a qualified charitable distribution, then you're basically lowering your total tax overall, lowers your AGI overall. So that tends to help out. There was a question that came through before the webinar that says, how do you ensure or assure that the QCD does get its credit on the tax return? That's very important, because not all custodians, so wherever you have that IRA at, let's say it's Charles Schwab, let's say it's Fidelity, not all of them will notify or note the what's called on the 1099 that you get, it's called the 1099-R. Not all of them will note that there was a QCD. They may have a checkbox, some check it, some don't. So it's very important that you keep a record of that and you provide it to your CPA or your tax preparer, because basically what they're going to see is they're going to get a 1099, and this happens at our firm, and we have to basically work with our clients to make sure that they go through this process with the CPA. Unfortunately, we got CPAs in-house who are able to catch a lot of this stuff. But essentially what will happen if you gave that $10,000 charitable deduction from your IRA, there could be a 1099-R that says $10,000 was distributed from this IRA. And they may or they may not check the box as a qualified charitable distribution. So what you need to do is, when you send in all your tax stuff, say, hey, I got this 1099-R that says $10,000, but here's my proof that it went directly to a charity, and it was directly from my IRA. And then the tax preparer will take that, they'll make a note on the tax return, and then you'll get that proper credit. If you don't do that, the tax preparer may not catch it, and you may be paying tax on it, and you may think that you weren't paying tax on it. So it's very important to let your tax preparer, CPA person, know that you made that contribution from your IRA. And lastly, I will say it does have to go directly from your IRA. So you can't take a distribution from your IRA, put it in your bank account, and then send a check to the charity. That will not count. The government won't allow that. The IRS won't allow it. So you basically have to go directly from that IRA, whether it's usually in the form of a check, directly from that IRA to the charitable institution. Then you got proper documentation, and you'll get the full credit on your tax return. So how to give? Here's another tool that I wanted to show you. Animal Humane has another link on their website that will help you go with this process for the QCD. So this is one way of doing it. You can do the QCD online. You can give a call. They'll help you through that process. Alternatively, you can work with your advisor and say, hey, Mr. and Mrs. Financial Advisor, we have a required distribution of, let's say, $50,000 this year, and we want to give some or all of that to Animal Humane or to a charity. They may either issue you checks to write directly from your IRA, or they may say, all right, here's a form, we'll send a check directly to the charity themselves. So again, when you do one of these QCDs, when you have that check, like here's a good example. There's well, actually, I'll get into that in a moment. But essentially, you can use the website, Animal Humane. Animal Humane has a donation tool there. Excuse me. And then you have your advisor to work with there. So the next slide, we'll talk a little bit more about the mechanics and how that all works. So basically, call your advisor, let them know. As I touched on a while ago, your your custodian, Schwab, Merrill Lynch, anyone who holds your investment accounts where you're getting your statements from, they'll have a process, and whether they have check writing directly or not. If you have check writing directly, that makes that a little bit easier. I know Fidelity does that quite frequently, but again, it may not tell Animal Humane that it's coming from you. So you want to put something on the memo section or include a note when you send it to Animal Humane. Other custodians will require a form. So I'll use Schwab, for example. We're familiar with Schwab. They can issue some checks, but in many cases, they'll have you sign a form. And then that check is usually mailed to you or your advisor. So in other words, it's addressed to Animal Humane, but it's mailed to your advisor or yourself. Then that's the next step where you have an opportunity to put that documentation to let Animal Humane know, hey, this is coming from me. Although it shows Schwab on here, it's coming from me. Please record it on your record. Keep a copy of that check. Again, give it to your CPA just in case that you don't get the proper credit on that 1099-R. And then, yeah, there's my note, notify your tax preparer there. All right, so some other ways to give. I will say that there's a few other ways to give. There's vehicle donations. There's automatic monthly giving if you wanted to do that. There's this plan giving that I'll speak to. So let me touch a little bit about vehicle donations, and I'm going to go to the Animal Humane webpage to kind of walk you through some of this. So they have an online form. They use Give Right a Hope that makes that process easier. They have the expertise to do all that. Casa Esperanza helps with that process with their monthly auctions. So yeah, the online form where you can do it. I will say that if you have a vehicle that you want to gift from a tax perspective, you don't get really the value that you think it's value, or what the Kelly Blue Book value says online, or what the trade-in value that a car dealer offers you. You don't get that write-off. Basically, you have to wait until it's sold. Then you actually have documentation of what that write-off could be. So essentially, the net sales price, and Animal Humane will work with you on this process, but they'll say, all right, you gave me this, I don't know, Ford 4Runner or 4Runner, that's a Toyota 4Runner, a Toyota 4Runner, it was a 2000 and it was worth, I don't know, $5,000. And it sold for $5,100. So Animal Humane will basically work with Give Right a Hope or Give Hope a Ride. They'll get that $5,100 net sales price after any other charges through the auction that may come about. And then you'll get basically a receipt from Animal Humane that says, hey, you got $5,100 net of all sales. You can use this as documentation for your tax return. So pretty cool tool here. It makes it easy for you. But I guess the key thing to remember is it's not just an arbitrary value. It's the final net sales price value that you'll get to deduct from your return overall. Automatic monthly giving. So let me show you this one here. Okay. So they have a month. Animal Humane has a monthly giving program, and it's a pretty effective way because, as you know, with nonprofit, or as many of us know with nonprofits, is they don't really have a consistent income stream. So they usually have to budget throughout the year. In fact, usually the end of the year, usually between now and the end of the year is when nonprofits get most of their money. So they usually have to plan around throughout the slower months that may be over the summertime or whatever it may be. So I guess as a benefit to Animal Humane or even any other charities, a monthly process of giving works out really well too. And you can use their website to set up an automatic deposit to either from your account to Animal Humane, and you can also use it from your credit card. Just will do it automatically. I know I have a couple of these where every month or so I get a charge on my card and it just continues coming through on a monthly basis. So it does make it easier for the nonprofit to have a consistent cash flow coming through, and it's certainly an option for you to work with. But again, if you're interested in doing that, go to the Animal Humane website. you have these donation forms that you can set up, and then we'll do it on an automatic basis for you. And if you have any questions, certainly call Animal Humane Stephanie, and they got some notes down here in terms of phone numbers to call and so forth. And another way of planned giving. So not many people think about this, unfortunately, but it's certainly an option. So as part of your estate plan, if you haven't done an estate plan, it's basically a will or a trust or whatever you create basically for your legacy and how you want your money to live after you. So in many cases, people will have a chunk of money and let's say, hey, my kids don't really need the money, or I don't have any kids, but I really like what Animal Humane does for pets and so forth, and I really want to give them a chunk of my estate after I pass. And so you can work with an estate attorney to and basically create a will or create a trust or some sort of setup that will allow you to give directly to Animal Humane. So let's just use a number. Let's say you had $1 million and you passed away, and that $1 million was sitting in a savings account. I'm just making this up. And your will or your trust that you created basically said, hey, anything that's left over, I want it to go to Animal Humane. And essentially in that case, your personal representative or the trustee of the trust will essentially say, hey, this is what's left over after paying tax, if any tax, and after paying any estate fees, this is left over, that's going to go to Animal Humane. So that's another way of giving. If you have a very large estate, that can save a lot in terms of estate tax. Right now, the estate tax threshold is actually pretty high. It may come back down, or will come back down when the Tax Cut and Jobs Act expires here in a few years. But essentially, it's about $11 million now per person, so it's pretty high. But let's say, hey, you've got over $11 million of wealth that you've accumulated. It's fortunate, and you have, hey, I'm going to give so much to this person, so much to that person, but I'm still going to have over 11 million after that. How do you bypass some of the estate tax? Because the estate tax can be pretty high, it can be up to 40%. So how do you bypass some of that? You give it to charity, and that will reduce that estate. So as an example, I don't have a chart here to clarify it or anything, but let's say you had $20 million in your estate, and anything over, I'm simplifying, it's like 11,500,000 or so, but let's say anything over $11 million up to that $20 million, so essentially $9 million is going to be subject to estate tax after you pass. So unless you did some pretty clever estate planning, then you can get past some of it, not all of it. But in many cases, you have this $9 million left over that could be taxed at 40%. So what is that? It's about $3.6 million that you'll have to pay in tax, netting out, I don't know, let's just call it $5 million left, which if you were to give to charity, you can give charity that full $9 million versus that $5 million after tax. So it's a good way to leave to Animal Humane or to a charity overall. If you want to do so, here's some information. That's the legal name and address, and then you'll most likely need their EIN number to make sure that it gets credited to the right association, in this case, Animal Humane. So work with your estate attorney. They do have some tools here. If you wanted to include them in the state, add some answers and questions and so forth, types of planned gifts that you can do. There's even a pretty cool link to creating a will for free. I think it's thefreewill.com, and it will actually help list Animal Humane on there. So really cool tools, even if you don't want to go through the full process of doing a full estate plan, but you do want to list Animal Humane on there. I would encourage you to go to Animal Humane site, use it, click the link, and input your information, create your will. And look here, it says it takes about 20 minutes. So that's actually pretty easy, because if you go through an estate planning attorney and go through the whole process, it's way more than 20 minutes, and it's definitely not free. So that's a benefit of using this tool here. All right. So lastly, here's kind of the last slide, and I'll get into questions in a moment. But I'm sure you heard me say, yeah, you want to give Animal Humane that information, one, to get you credit and so forth. But there are some benefits to it. So you can still remain anonymous, but here's some benefits of not being anonymous. So if they're Animal Humane, they can thank you. They say, hey, thank you for the support. They want to thank you, obviously. So they want to know who's given, and that really helps track information and get you some credit where credit's due. Some people don't necessarily want the credit, but it still helps Animal Humane. You can be updated on a regular basis on how your support is having an impact with the organization. You can track your giving if you wanted a statement or a report on a regular basis, or for your tax return. So let's say you wanted to give the Animal Humane and you did it a couple times throughout the year. If you didn't put your name, or maybe you put your name one time and you didn't put it the other 2 times, it's going to be a little challenging for them to get that accurate number for you. So in many cases, if you can just let them know, they could run a report and say, all right, Paul's account's right here. He gave X amount of dollars over this time period. Here's what you have for 2021, Paul, and I'll take it to your tax preparer, and they can add it to add it as support for your tax return overall. And then lastly, I'll mention is that they can still keep you anonymous if that's what you want, to anyone outside the organization. So in other words, you can give them your information just so you get that credit internally, but you'll remain anonymous. So they're not going to post your name or anything on their website or talk about you. And that may be what you really want when you want to stay anonymous. But the other ways of giving them information, at least internally, they can use that to better serve you and give you more information, and actually show you how you're making an impact, and thank you for that overall. Okay, so we did have one question. I see one came up now. So now would be a good opportunity. If you have some questions that I didn't get to throughout the presentation, I see one that came up, I'll get to in a moment. But if you had some questions throughout the presentation that you thought about and you want to type them in, at the bottom of your screen, you have the Q&A box. So go ahead and click that, and that'll allow me to see that come through. So go ahead and type those in. But one that did come in earlier before the webinar was, if you write checks from my IRA, how do I ensure? I touched on that in a nutshell. Just keep a record of that. And again, it has to go directly from your IRA to the charity. So it can't be your own personal checkbook that you have at your bank account. It has to be the IRA checkbook or a check directly from the IRA custodian. And keep a record of that check, because that's what you'll provide to the CPA or the tax preparer, and they'll use that to credit you on your tax return correctly. So it's very important, because not all custodians will check the box on that 1099, and you may be paying tax and you don't know it, and your tax preparer wouldn't know unless you communicated that to them. Another question that came through is, can you use your RMD, your required minimum distribution, from your mother's IRA? So I kind of touched on that earlier, but essentially what that's saying is, if my mother passed away and I inherited her IRA, but I wanted to use some of that for charitable giving, and I want to use that qualified charitable distribution. Well, the only way I could use it as a qualified charitable distribution is if I'm over 70 and a half years old. Then at that point, the IRS will allow me to use that, regardless of if I have to take a required distribution, even though you do, then in this case, it doesn't count. So in other words, the rule there is, if you're over 70 and a half, any RMD will work for you. If you're under 70 and a half, if you have an RMD, required minimum distribution, you cannot do the QCD. All right, looks like we got another question here. So if I have a stock in an IRA account, could I give this before I am of retirement age, or do I have to wait to avoid penalties to that appropriate retirement age? Good question. So essentially what it's asking is, hey, I bought this stock in my IRA, it's done very well, or it could, I'm assuming it has, and I'm curious if I can give that away now from my IRA and not have to pay penalties versus waiting till retirement age. And unfortunately, the answer is you'll have to wait, because essentially what's going on is the IRS just looks at it as a distribution. from the account, whether it's a stock or not. Even if it goes to charity, they don't allow it unless you're 70 and a half for that required minimum distribution, then you can transfer it out at that point. I will say as a caveat to that question is, if you have appreciated stock in an IRA, it's not going to be beneficial or as beneficial to give the stock. And the reason is, and this is specifically in the IRA account, the reason is anything that comes out of an IRA is going to be taxed at the same rate. So whether it's a stock that went up from $1 to $100, or whether it's a bond that stayed at $5 the whole time, anytime you pull money out of that IRA, it's going to be the same tax rate at your ordinary income tax rate. So that's a little different from your regular brokerage account that you have. It may be an individual account, maybe a joint account you have with a spouse. Those are what are called taxable investment accounts. And those are the ones you would want to use the stock or the mutual fund or the bond, whatever is in that account, to give to a charity, especially if it has appreciation in there. The IRAs don't really benefit you that much, again, because the IRAs are always going to tax you the same ordinary income tax rate, whether you had a stock that had a huge gain or not. It's just cash coming out essentially. So there really isn't a way to avoid any penalties if you wanted to do it before retirement age. It's unfortunate. I think it's really there because the IRS wants to basically say, hey, we're letting you take this tax-free growth, and we're not allowing you to pull anything out, whether it's for charity or not. So unfortunately, that will have to wait till at least your required minimum distribution start, and then you can start giving some of that to a charity at that point. Alternatively, you look at your brokerage account if you have one. If not, it seems like cash may be a good option. So good question there. All right, I'll wait another minute or so to see if there's any other questions. Haven't seen any others come through. I will note that we'll have a follow-up email after the webinar to just give you some insight about all the links that I went through a while ago, contact information, who to contact, and so forth. I don't see any other questions, so I wanted to thank you all for oh, one just popped up, I think, unless that's the same one. All right. Really helpful. Would it be possible to get the PowerPoint included in the email? Yes, so we'll have that as well. Thanks very much. Really helpful. Glad to hear that. Thank you all. Well, again, thank you all for joining us. I'll pass it on to Stephanie.
Thank you so much, Paul. That was a lot of great information. We're just so appreciative of your time and all of your knowledge and expertise. And thank you, everyone, for joining us. I'm hoping to get that follow-up email out this afternoon with the recording, PowerPoint slides, all the links, certainly my contact information. If you think of a question at any future date, you're welcome to reach out to me if I don't have the answer myself. We've got experts like Paul and others that we can usually find the answer for you. So thank you, everyone. Thank you, Paul, and have a great day.
Yes, thank you all.
Bye.